Hello everyone and welcome to my tutorial regarding risk-based financial statement audit, the client acceptance phase. Here, before any audit planning, we need to make a decision first if we will accept the engagement or not. So again, this is Josie De Leon, and let's get started. This presentation focuses on the client acceptance phase of a risk-based financial statement audit. We will explore the definition and purpose of risk-based audits, the importance of risk assessment, and the key phases of the audit process. We will start with an overview of the risk-based financial statement audits, including their definition and purpose. Next, we will discuss the client acceptance phase, its objectives, and the factors that influence decision-making. We will also cover pre-engagement procedures and conclude with an interactive section featuring multiple choice questions. So, the risk-based financial statement audits focus on identifying and addressing risks that may impact financial reporting. So, this approach enhances the effectiveness of the audit by concentrating on areas with greater risk exposure. A risk-based financial statement audit is designed to assess the risk of material misstatement. Remember, material misstatement in financial statements. Its purpose is to provide reasonable assurance that the financial statements are free from significant errors, thereby enhancing the reliability of financial reporting. So the risk assessment is crucial in guiding the audit process. It helps auditors to identify areas that require more attention and resources, ensuring that audit procedures are tailored to address the most significant risks. So the key phases of a risk-based financial statement audit include planning, risk assessment, execution, and reporting. Each phase requires careful consideration of identified risks and the application of appropriate audit procedures. Okay, the client acceptance phase is critical in establishing a successful audit relationship. It involves assessing potential clients to ensure they align with the auditor standards and values. We just don't accept any client. We need to assess first if that client is low risk, medium risk, or high risk. Otherwise, if we don't do that, we'll probably get into trouble later on as auditors. The primary objective of the client acceptance phase is to determine whether to accept or to continue the audit engagement. This decision is based on the client's integrity, associated risks, and the auditor's ability to perform the audit effectively. If we know we already have a hint or we already know that the management of this particular company is fraudulent or they don't have integrity, then we have to think twice before accepting any engagement for audit. So, several factors influence actually the client acceptance. So, what are those factors? That includes the client reputation, as I mentioned to you, no? Financial stability. Is the client still financially stable or there's a going concern? The management integrity, of course, and any previous relationship with the auditor. So understanding these factors helps auditors make informed decision. If the client had another auditor in the past and want to change their auditor, we need to ask questions. Why? Why are they changing auditor? So it's something to think about. Okay, decision-making process. In the decision-making process in the client acceptance phase, that involves gathering relevant information, assessing risks, consultation with the experts, or talking to the previous auditors, and the standards compliance. Okay. So, what are the pre-engagement procedures? So, what is meant by pre-engagement procedure? It's an essential understanding of the client's environment and assessing associated risks before formally accepted the audit engagement. Okay? So a preliminary risk assessment involves identifying potential risk factors related to the client's industry or financial statements. So this assessment guides auditors in planning the audit approach and, of course, to allocate resources. Understanding the client's business is vital in identifying risks and tailoring audit procedures. It involves analyzing the client's operations, industry characteristics, and the regulatory environment. In evaluating the management integrity, well, let's talk about management integrity. What is meant by that? So it's something that's crucial. It's a crucial aspect of the pre-engagement process. So auditors must assess whether management is trustworthy and if they are competent, as this impacts the overall reliability of the financial statements. Okay, now we are in conclusion. So, importance of client acceptance phase is critical for ensuring a smooth and effective auditing process. It helps in identifying potential risks early stage. The second one is understanding. We covered understanding audit objectives. Understanding the audit objectives allows for better planning and execution. It increases the reliability from the word reliability of the financial statements, and it enhance the audit effectiveness. So there should be like proper procedures in the client acceptance phase. This is very important. Okay, before we do any audit planning, we need to follow these proper procedures. Okay. And now we're going to the next slide. Let's test your knowledge. So, are you ready to test your audit smarts? We're going to go through 5 multiple choice questions. These questions cover the risk-based audit process and pre-engagement procedures. So, feel free to pause the video after each question to think. Okay, and let's dive in. Okay, for question number 1. Which of the following is the most critical initial step in a risk-based audit process? A. Identifying and assessing risk of material statement. B. Detailed testing of all financial transactions. C. Preparing the annual financial statements. And D. Obtaining legal advice on company contracts. So pause the video now to think. The correct answer is letter A. Identifying and assessing risk of material misstatements. Remember that the primary goal of a risk-based audit is to focus audit effort on areas with higher risk of material misstatement, making this the core initial step. Detailed testing of all transactions, like in letter B, is too broad. Financial statement preparation in letter C is management's responsibility. Remember, preparation of the annual FS is the responsibility of the management. And the letter D, obtaining legal advice, is not a central initial step for any audit process overview. Okay, let's go to question number 2. During the pre-engagement procedures, what is a key factor an auditor considers regarding the potential client? A. Auditor independence and competence. B. Collecting all client bank statements. C. Drafting the audit report. And D. Performing a detailed analytical review of client sales trends. Okay, pause video now to think. The correct answer is A. Auditor independence and competence. Assessing independence and competence ensures the auditor can perform the audit objectively and effectively, which are fundamental ethical and professional requirements before accepting an engagement. Collecting bank accounts and drafting the report happen later on. Performing analytical review, that's part of the execution of the audit execution phase. Okay, now let's go to question number 3. What is the primary purpose of performing pre-engagement procedures in an audit? A. To ensure the auditor has the necessary capabilities and resources. B. To finalize the audit report without any further procedures. C. To perform all substantive testing for the audit. And D. To guarantee a clean audit opinion for the client. Okay, pause video now to think. The correct answer is A. to ensure the auditor has the necessary capabilities and resources. So the purpose of pre-engagement activity is to assess whether the audit firm has the capacity and qualifications to undertake the audit effectively and ethically. They are preliminary steps and do not involve finalizing reports, performing substantive testing, or guaranteeing opinions. Now let's go to question number 4. What is the main purpose of an engagement letter in the pre-engagement phase of an audit? A. To provide a preliminary audit opinion. B. To establish the terms of the engagement and avoid misunderstanding. C. To immediately begin substantive testing of accounts. D. To collect all client documents for archiving. Pause video now to think. Dun, 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 dun. The correct answer is B. To establish the terms of the engagement and avoid misunderstandings. The engagement letter formally documents the scope, responsibilities, and other key terms of the audit, preventing disputes and setting clear expectations for both the auditor and the client. It does not provide an opinion, initiate substantive testing, or primarily collect documents for archiving. Okay, let's go to question number 5. Okay, I should have the question first. Before accepting a new audit engagement, what is a crucial step an incoming auditor should take regarding communication with the predecessor auditor? A. Obtain a detailed list of all client employees. B. Review the predecessor auditor's prior year working papers without client permission. C. Inquire about information that might bear on the integrity of management. And letter D. Discuss the potential for future joint audit opportunities. Okay, pause the video now to think. The correct answer is dun, 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 dun. Letter C. Inquire about the information that might bear on the integrity of the management. Professional standards require the incoming or the successor auditor to communicate with the predecessor auditor. The previous one with client, of course, with client permission. Unlike in letter B, it says here without client permission. So with client permission to gather information that helps determine if the new engagement should be accepted. Key areas include management's integrity, disagreements over accounting principles, and reasons for the change in auditors, as I mentioned in my previous slides. Reviewing working papers in letter B requires client permission and is done after the acceptance. Obtaining employee lists in letter A and discussing joint opportunities are not primary engagement communication objectives. All right. You've completed the quiz on audit and audit process and pre-engagement. So understanding these foundational concepts is key to a successful audit journey. Sorry about that. If this tutorial helped you, give it thumbs up. Don't forget to subscribe for more valuable content and click the notification bell so you don't miss our next video. So if you want more CPALE type quiz like this, please type try quiz in the comment section below and I will give you more questions for practicing for your CPA exam. Thank you again.